We are back with a busy day of committee moves. Bill Baruch, I said he was going to join us. He does now. Nice to have you. You have two new buys. MasTec, number one. Why?
This is a name we owned and we loved last year, and it set a record high into August, the day of its earnings report, and it missed hugely this last August. It's down big. They had problems with visibility in their billing, and there was delays in billing, so their guidance was very, very poor. We ended up getting out of that stock and pushing aside and been watching it for quite a while. Put that money elsewhere in industrials. Now you're starting to see their EPS guidance lift up. I like the diversity in the infrastructure business where they put a lot of cash and spent on different ventures. Like IEA was a company they purchased. It costed a lot of money to integrate it. So there's less integration costs down the road. I like the infrastructure in natural gas space. I like the name. I always have, and I think now we have a little visibility to feel more comfortable with it. So we are back in that name now.
Why'd you buy Chubb? Is that a Berkshire thing? What's up with that?
Well, if it's good enough for Warren Buffett, it's good enough for me. I say that facetiously, but there's some truth to that. I mean, it's best in breed in underwriting. The name has broken out, and overall, I think that I want some exposure in that space. I haven't had any insurance space, so as we talk about some of the sells, you can see some of this is sort of rotating within the sectors. I would like to be able to add to that name at 255 as it comes back in, and I think it's a breakout that's going to stay in an uptrend.
So yeah, your sells that you allude to are, I frankly find them more interesting, but I wanted to do the buys first. Why'd you sell Morgan Stanley?
I think as they go through this transition away from Gorman, there's a little bit of question now on, what sector within the business is going to lead. And then on top of that, it's run up, but it's also been a little bit of underperforming behind a name like Goldman Sachs. Compared to Chubb, that's broken out within the financial space, Morgan Stanley's running into a lot of overhead supply from its 2022 high. So I want to get out of the way and watch it a little bit as I kind of rotate in something where I feel there's a bit more momentum and a bit more certainty.
Weiss, so he's out of Morgan Stanley. You're in, I think, only Goldman, or is it Goldman and BAC?
BAC, Goldman, by far a much bigger position. That's a real core position.
What do you think about the financials, though? It's interesting, rising rates said to be no good. And now, if rates are falling because you're worried about the macro, that's no good either.
Well, I think actually the market got over its skis in believing that the IPO market was going to open. You've only had 4 tech IPOs this year that are really significant in terms of their size. Every banker I talk to, and we've met with a lot of senior bankers recently, are looking at mid-25 before the equity market opens. And that may not be the case. I mean, if the Fed starts easing sooner, which not just 1 or 2, but really easing, then you can see the equity market open up sooner.
Well, I mean, the capital markets for IPOs and stuff. Yeah, I mean, I think even the leading VCs think 25.
Yeah, and that's the story.
So maybe got a little ahead of yourself.
But what's going to be most interesting then is you've got such a flood of new supply coming on. Can the market handle it?
Yeah.
Because huge pipeline.
So, Bill, Weiss sold CAT yesterday. You sold it now, too.
I sold it last week.
Oh, you sold it last week. Sorry. Yeah. Weiss sold it last week. You're selling it as well. Why?
Yeah, we sold it on the open yesterday. I mean, I look at the trajectory of PMIs right now, and that is worrisome. Yesterday's manufacturing PMI, in which we sold just ahead of it, was poor. Some of the backlog that was sort of appraised coming into the year is starting to erode, and it shows a little bit of a very cyclical business here. If the economy starts to take a downturn, look at Atlanta Fed GDP now that Josh was just referencing the previous segment. If some of that happens, Caterpillar is a name that's going to get hit. Now, we also own United Rentals. And so I feel like a little too much exposure with that direct, reliance on some of the infrastructure spending, the Inflation Reduction Act that's coming out this summer. So taking away a more global name and reducing Caterpillar and focusing, again, some of that money went into MasTec. We also own United Rentals. The idea here is we're netting out cash as well, and we're taking a little bit of a cautious approach.
You sold Target.
Yeah, disappointed in the earnings report. I was hoping to see a little more lean into the ad revenues. But overall, this is a bounce back. I think Friday's move was a gift back to where the earnings breakdown was. So I'm, again, overall, just stepping out of that. I mean, if I get back into more staples, some of the discretionary staples, I think there's better places to be than Target. So I am worried about that. And again, overall, these moves, selling 3 and adding 2, and even going back to some of the moves I made last week, I've netted about 3% cash. We also own the SPY put spreads, which I highlighted 2 weeks ago. So taking a cautious approach here as we work through the data this week, as well as the Fed next week. And, I'm really worried whether bad news is going to be bad news. So that's where I am right now.
Good stuff. All right. I appreciate you joining us. Thank you. Bill Baruch. We'll talk to you again soon. You said you're like a little personal buyer strike for a little bit, but you are looking at Chubb.
I'm looking at, because PNC Insurance has done great, and Bill's absolutely right. That's the creme de la creme, and I was listening to both Bill and to you, Steve, and here's my thoughts, man. I look at Caterpillar and United Rentals and all of these things, and even Morgan Stanley, which he sold. I can see the value there as long as the cracks don't get worse. So, look, I'll be on with you Friday. We'll make a decision then.
Okay.
You may see me selling Friday. You may see me buying Friday. Let's see what the data dependent.
Suspense. Tune in. The suspense.
Well, okay, there you go. Tune in. Same bat time, same bat time.
All right.